Thank you everyone for being here and for joining us for today's session. So we got real estate investing for real estate agents today. So this is your chance to finally learn how to invest in your own income producing properties, because we spend most of our careers really helping our clients invest in properties. This is our turn to learn. And we have none other than Connor Steinbrook with us today to lead the training. He's one of the top residential real estate investors in the US, top 50 influencer at eXp Realty. He is the co-founder of the fastest growing organization at eXp Realty with over 1,500 agents worldwide. And then after the training, we're going to catch the second half of the training with Kyle Sutton to learn about how agents across North America are creating financial freedom using the eXp Realty business model. So please put your mic on mute. We'll take all the questions at the end. Connor, all yours.
Awesome. Well, thank you guys. So what I'm going to do today is I'm going to go through a little bit of training here on how to understand why you need to do both sides of the business and how to understand how both your businesses work together, sales side and investment side. So I'm going to tell my story. As I go through this, I'll tell you the lessons I learned. I'm going to tell you kind of about why I went into the investing space first, certain strategies I did throughout my career, what they did, how they fixed my business, and how I transitioned from one strategy to the next, and then how I got into EXP and why I saw EXP. Okay, so first thing is, guys, I went off to school in 2003, put $20 in poker site for fun, ran into a small fortune, and had a great life, and then that life disappeared. And this was the first lesson I learned, because if you guys look on the internet, you'll find all the stories back on April 15, 2011. They shut these big online poker sites down. They were offshore accounts, and they were probably money laundering, doing all sorts of different things. But I lost everything as far as my way of creating an income. So the first thing is, when it comes to wealth creation, we're going to give you 4 things that create wealth, guys. The first thing is multiple streams of income. You cannot have one income stream. And this is the problem with a lot of agents, is they have one way of creating income, but also they have one way of generating leads for that one income stream. So I want you guys to start thinking not just multiple streams of income, but multiple streams of marketing for your business, because a stream of marketing is an income stream. So this is the first thing, guys, is that you need to have more than one income stream. How many do you need? You need to have at least 3, in my opinion. 3 that cover your basic necessities, your basic liabilities, because if you have 2 and you lose 1, you're right back to 1. And we have what's called life liabilities, children, grandchildren, health insurance, or health issues, getting in a car wreck, taking care of your older parents. And if you're trading all your time through active income models, we'll talk about the ways to create income, different ways here in a second, and that one way goes away and you don't have time to trade into it, you have no income streams. The first lesson I learned is I have to have more than one income stream. And so the second thing I learned was, to create wealth, is you can't do everything on your own. You have a solopreneur versus entrepreneur, and most agents are a solopreneur. You have to have duplication leverage, other people's money, other people's time, other people's efforts, right? Building a real estate team, having employees, having multiple rental properties, having multiple videos on the internet, multiple positions of equity in different businesses. Duplication creates wealth, not your individual efforts. The first thing is, guys, if you're doing everything on your own, start thinking how to leverage yourself and duplicate yourself outside yourself. Now, the third thing that creates wealth, guys, besides multiple streams of income and equity, or in duplication, is equity models. So this is one of the biggest reasons agents should become investors, is they need to understand what equity does. Equity compresses time. So these next 2 income streams I'm going to talk about, residual income and equity models, that you don't usually do as an agent, these are ways to increase time and compress time. So what I mean is, when you go out there and sell a house, you're trading time directly to sell that house and get paid for their efforts, for their time traded to sell that house. And if you don't have another contract, your income stops. Now let's look at comparison to if you buy a stock, or you buy a rental property, or you place yourself in an equity position and buying part of a business like venture capitalism. Let's say you buy a stock and it triples over the next year, 300% X, right? How much time did you put in to make that stock go up? You didn't put any time into it. Time expanded through equity growth, right? No time allocation to make that equity position grow. So this is why equity creates wealth. So when the rental properties go up, you didn't make it go up, the market made it go up. So this allows you to free up your time while you go out there and create more active income models, more residual income models, and more equity models. And then the last thing, guys, besides equity, is residual income. It's the most important thing we have as entrepreneurs. It should be the only goal that entrepreneurs have, because residual income, guys, passive income, gives you time and money freedom, not just money freedom. And there's a lot of doctors, a lot of attorneys, a lot of high-level salespeople that have money freedom. They're making $300-400K a year, but they don't have that time freedom. And if you guys ever want to do what you want throughout your life, you need to have time and money and health, all 3 of these things. So the lessons I've learned early on was, I need more than one income stream. I need to have duplication in my business. I can't do it on my own. I have to have equity models. I have to have residual income models. So guys, write this down. There's only 3 ways to create income: actively, residually, or through equity. Now, the main thing is you need to understand how to capitalize on every lead that comes into your business. And I'll get to this in a second, but to finish off my story. So I jumped into real estate, guys, failed miserably, went $100,000 in debt, and I ran out of money, but I had time. And what I was doing instead of filing bankruptcy was I was working for minimum wage, sweeping floors. I was teaching myself internet marketing and social media marketing. So if you guys right now don't have a lot of money in your business, which is very common, social media is the single fastest, the safest way to grow a business without taking a big risk. So I use YouTube. I was trying to build out websites. I was doing keyword research, teaching myself search engine optimization. I was using YouTube to educate myself, and I was building private YouTube channels and linking to my websites. And my websites grew to be the #1 ranking websites in Dallas, Texas. Now, what I started doing as these leads come in, I'm gonna go through a bunch of different exit strategies here in a second for you guys, was I started wholesaling houses. And I'll explain what all these are as I go through this in a second. And then I started transitioning to fix and flip properties. I started renovating houses like you see on HGTV. Then I became financeable again. I started buying rental properties. I started controlling rentals. And then I realized that cash flow wasn't as much passive as I wanted. So I transitioned into owner financing. And I'll explain why I did all these things here in a second. I'm just going to go through kind of my lineage of what I did in my business. And I started buying land, mobile homes on land, and doing other strategies. And then along the way, because my YouTube channel, I built a channel called Investor Army. It became Texas's #1 residential real estate investing channel. I was approached with EXP, and that's when a lot of people started reaching out to me about EXP. And the way I saw EXP was that it was built for the investor mentality. We have a 3 income stream brokerage model: active income through sales, equity model through stock awards, and residual income through the revenue share model. So I said, this is incredible. This is gonna be the first time an investor agent can have all 3 ways of creating an income on both sides of the fence. So that's the reason why I joined EXP. And then Tharmela talked about our little bit of our experience here and how it's been great and how we've grown our organization to about 1,500 agents. We're adding about 125 agents in the past 30 days alone. But this all came from understanding wealth creation through real estate ownership for me to identify the opportunity with EXP when I saw it with the multiple streams of income. So now what I want to do, guys, is I want to talk about the way that you look at your leads when they come into the business. And I'm going to go through a bunch of different exit strategies like I just talked about, explain these so you can understand these for your business. So when a lead comes into the office, you need to be able to capitalize on every single lead. So think about active, residual, equity models on both sides of business. So you always have a price point versus equity position when you're analyzing for your investment leads. So if a lead comes in, I try to separate them under $250,000 price points and $250K and up. Now, the reason why I separate these 2 types of leads based off price point is because when you're controlling assets that cash flow, when you're looking for like rental properties and note properties, once you get above $250,000, guys, in most markets, the relationship between your financing, your rent rates and taxes and everything, when you're netting out, it gets tough to cash flow once you get above 250K. So I'd say the 250K and under price point, really 200K and under in most markets is your cash flow zone. And then above that price point is going to be a different type of exit strategy or listing. So when it comes in low price point, if there's a high equity position, you can pretty much do anything with that lead. You can wholesale the house, you can flip the house, you can rent the house, you can owner finance the house, you can lease option the house, right? But if there's no equity, there's certain creative strategies, guys. You can do what's called a subject to acquisition. You can buy the property subject to the existing financing staying in place. Probably not have time to go into this strategy here all into detail, but you can take a property sub to and wrap it. You can do owner financing direct from the homeowner and do owner finance wraps with the homeowner, because it's about the only way that you can do that transaction. Let's say if there's no equity in the deal and that homeowner's got 20 or 14 days before they go into foreclosure, there's not enough time to traditionally do that as a real estate closing, and you have to do this quick. This would be a strategy to do so. Now, when you're above 250 and up, high equity position, once again, guys, you can do any exit strategy. But if there's a low equity position, you pretty much have to list that house or do what's called a lease option. So what I'm going to go through, guys, is talk about the different exit strategies I ran through so you have a good fundamental understanding, and I can answer questions here at the end. So I started out wholesaling in my career. Now, why did I start out wholesaling? I wasn't bank financeable. My main goal getting into real estate investing was to control real estate to build wealth through equity and residual income. But I messed up my financeability, so I had to start out with what's called wholesaling houses. Now, the easiest way to understand what wholesaling is you're selling the beneficial rights and interests to purchase a property. You're not really selling the house. You're selling the contract. So let's say Kyle's the homeowner and Tharmela's a house flipper or landlord in my marketplace. What a wholesaling company is doing is they're a marketing company. They're going out there generating leads, just like Kyle generated 130 leads. So what they're doing is they're getting in contact with the homeowners. And let's say I find a house that the homeowner is willing to sell for $100,000. And I know that Tharmela told me that she'd buy a house just like this with all these numbers and specs that she'd pay $110,000 for. Well, if I don't have any money, what I'm going to do is I'm going to go to Kyle, the homeowner. I'm going to make an offer with Kyle, and I'm going to put it under option contract. So I'm going to get the house under contract for $100,000 during an option period window. And during this option period window, what I'm going to have is what's called equitable title. And now I can market this contract in the marketplace, and I can sell that contract and step out of that contract. So let's say Tharmela wants to buy the house for 110. So the A party would be me to Kyle, and then the B party or the B side transaction would be me to Tharmela. I would go into an assignment contract. I'd assign my beneficial rights and interests to Tharmela. I'd sign a contract for $110,000 to Tharmela. And at closing, she's going to bring $110,000 to closing. I'm going to get a $10,000 assignment fee, and I'm going to basically sell my contract to Tharmela. She's going to buy the house, own it, flip it, do whatever. Kyle gets his $100,000 originally, and I get a $10,000 fee in the middle for doing this. This is the most common way of agents or anybody getting in the industry. It's a simple assignment of contract. Now, there's also a second way to do that same transaction, which is called a double close, a double escrow, or simultaneous close, which is where I'm actually bringing a funding partner and not just assigning the contract. So in this situation, I would actually have a transactional lender fund that project. They bring the money right at closing. I'd actually own the property for a second right before Tharmela's lender brings their back-end financing, and there's going to be two closings. And I'm actually bringing a transactional funder, which is basically someone that's going to fund that transaction for that day alone. So I'm going to have a funding source fund that transaction. Then Tharmela's lender is going to fund that transaction right after, simultaneous closes. But it's the same way of getting to that same transaction. So I started out doing. Second thing is we're not going to touch too much on flipping houses because you guys probably well understand flipping houses. This was a second strategy I went to. This allows me to create a bigger return on the same lead that came in. Now there's more time allocation to this, more stress, which Tharmela's talking about because you're kind of like a project manager. But on a house that I'd wholesale for like $10,000, $15,000, if I flipped that house, my profit would go up to $25,000 to $40,000, usually on the same project. Now you're increasing the risk because now you have things like carrying costs. Carrying costs, guys, are these costs that are associated with the project as you own the property, taxes, loan fees, water, electric, insurance, these types of things. So the main goal with when you're flipping houses, guys, is speed. So the faster you get the same project done, the higher the profit center. So if you have $2,000 in carrying costs and your estimated profit's $25,000, think about the dent that puts in every single month that you drag things on. So what you need to understand is one of the most important things when flipping houses is the coordination of the trades coming in to do things, right? So you need to make sure that the project flows smoothly. Plumbers, then electricians, then people putting windows, floors going in. You need to do it in the correct order because if you don't, you're going to cause time delays, and then it's going to mess a bunch of things up. And so that's one of the most important things, guys, is to think about when you're doing house flipping is your carrying costs and how fast you can do this. Now, as I started to buy rental properties, I started to do this in a number of different ways. I didn't have money in the beginning, guys. So what I was doing was I was going to homeowners and I was actually getting homeowners to finance the property to me. So if you guys don't have money and you don't have a funding source, you can go out to homeowners in the marketplace and you have an unlimited funding source. If you can explain to a homeowner that they can finance that property to you, a lot of them are going to do this. And I would explain to them that, hey, I can give you X cash today, or I can give you more tomorrow if you're willing to be patient to get this money. I just show them that I can pay them a lot more for the property if they finance it to me, and I can pay them over time. And a lot of people will take this opportunity. So I started buying my first rental properties direct to the homeowner with owner financing, and they'd finance the property to me. So you guys don't need to have bank financeability. And I actually literally got into my first rental properties with none of my own money, using credit card, cash advances, and borrowing money from my parents. So if you guys are really strapped, you just have to get creative and you can do this. So I started buying rental properties, building up my rental portfolio. And as I became financeable, I started doing what's called you probably know it as a BRRRR strategy. It's a buy, fix, and refinance out. And so what I do is I'd raise interest-only money through either private money lenders, people that had money in their IRA accounts, or with what's called a hard money lender. These are interest-only loans. Now, an interest-only loan, guys, as you guys know, doesn't pay down, it doesn't amortize. So the problem is, why do you create wealth with real estate is principal pay down over time. So if you get into a property because quick, easy money that's interest only, you have to exit that property into a different loan on the back end. So we'd finance these properties on the front end with an interest only loan. We go renovate the properties, we get the properties up and stabilized. The forced depreciation of the rehab would drive the value up. And then we're going to go back to the bank 6 months later after the seasoning requirements, and we're going to finance out into a long-term 15 to 30-year loan, depending on which project and which area. And that's how we're going to get in and out of the property and keep all our money. Now, rental properties are great. I think rental properties, guys, are more of an equity wealth creation tool over your career, not a cash flow tool. So what happens to a lot of individuals is they start aggressively acquiring their first rentals and they get ahead of themselves. And a lot of times they run out of money and then they start having people turn over and they have a vacancy loss and they have repairs that they have to put in the property. This is very common. So what happened to me was I got caught in a situation where I did run out of money and I had to stabilize properties. I couldn't get them back up and I couldn't get tenants back in there. So what I did was I met a mentor of mine who had a very similar story, and he told me what he did was he got out of this by doing what's called owner financing. So this is something that's very important to understand, guys, is that you can sell your properties and be the private bank on your properties. Essentially, you're the one that's financing the property to the individual. And so what does this actually do? So when you owner finance a property, first thing is, let's say you have 10 rental properties and you're strapped for cash and they're worth $150,000 a piece. Usually you can get about 10% down, sometimes 15% down. So let's say you've run out of money. What if you go and sell some of your rental properties on owner finance? $150,000 price point, you start taking $15,000 down on all 10. You just brought $150,000 of working capital into your business. But you're now the bank. You didn't get rid of the property. You're in a different controlling position. Now you're the financing partner. You still have the equity, or you still have the cash flow because you're still having a P&I payment. So in fact, in a lot of these situations, you're bringing cash on the front end, you're still creating equal to or more cash flow, but what do you also do on the back end? You're avoiding the back end side of the business, the expenses, right? Which is really what puts people in the rental property business in trouble in the first place. Now what happens, let's say Kyle's was my tenant, now he's my tenant buyer. Guess what happens if HVAC goes out and it's a $5,000 expense? I'm not the landlord anymore. I don't own the property. I control the financing. Kyle's the property owner, just like he would be with the bank. So by owner financing these properties, I'm bringing working capital on the front end, fixing a struggling business, right? Still keeping the monthly cash flow so the residual side's coming in, still controlling the property. If they don't make the payments, I can foreclose and take it back, or I can work out an agreement where they sign the property back over. And then I'm avoiding massive expenses on the back end by not having the long-term liabilities of repair costs, if that makes sense. So owner financing saved my business early on, and it's a great strategy, guys, to think about. Now, some of you guys, I don't know which market you're in. There's also another strategy that you guys can do, which is called contract for deed. Now, the big difference that a lot of people don't understand between like owner financing a property and contract for deed is when the deed transfers and when ownership and title transfers. So when I buy a property on owner financing or sell a property on owner financing, title changes right at the closing, just like when you sell a house. But let's say I sold the house for $100,000, $10,000 down for 20 years or whatever it is. Now, when I do this, the person buying the property for me gets ownership of the property and I'm in a controlling position through the financing. Now, what a contract for deed is, it's a little bit different. You could have the exact same sales transaction, $100,000, $10,000 down, $20,000 loan, but the deed does not transfer until that final payment is paid off over time. So I'm still in control of the property, and not until that very last payment at the end of that term that's when finally the deed transfers over at the end of the term. So that's the difference. Same financing, same structure, difference of when the deed transfers. Okay. And then there's what's called a lease option. Now, lease option is a situation where you can do this in multiple different ways. There's 3 different types of lease options, guys. There's a straight line option, which would be me directly straight line to Kyle. Let's say I own a property. I'm going to lease option my property or rent to own my property to Kyle, which is going to be a combination of a lease agreement and an option to buy the property. Now, there's a number of reasons people do this. Let's say, why would someone buy a house on a lease option? Let's say I'm in Texas, or they're moving to Texas from California. They think they really like this house. It might be their forever house, but they just don't know. They don't know the new market. So a lot of times homeowners are wanting to come in and rent a property for a year, but they also don't want to potentially lose a property that they like, but they want to experience that property, right? So they'll have a 1-year rental option or 1-year lease option, where at the end of that lease option, they've already contractually signed a contract that says, if I want to exercise my option, I can buy the property at this price. So this is a way for someone to move into a different market, experience the market, and not have to get stuck in a forever home and move into a different state, which happens to people all the time, and they didn't really know where they're moving, if that makes sense. Now, another way that you guys can understand this from the investor side is why someone would do a lease option is, what happens if you want to control a property for 2 years because you think the market's aggressively appreciating, and you go into a property, say, at $250,000 lease option, where you can lease the property, you can rent it, you create the cash flow, and if you have the acquisition option price at $250,000, let's say that property goes up to $300,000. You can exercise your option because you have $50K in equity, right? Let's say something happens to the market and the market drops down to $200,000. Do you want to exercise your option now? No, because you're going to lose 50 grand. So it's a way for you to control properties without taking the risk. So straight line option, guys, is you directly to the homeowner. An assignment of a lease option is a similar thing to what we talked about with wholesaling. Whereas I'm going to create a lease option opportunity for someone else, and I'm going to assign my option to them, and I'm for a fee, $5,000, $10,000, $15,000, whatever it is, and I'm going to let someone else be in the controlling position of lease option. And then there's the last one, which is called a sandwich lease option, where there's 3 different profit centers for the investor. So let's say Kyle's a homeowner, and then Tharmela is another investor. I'm going to be in the sandwich position, the investor in the middle, meaning just like a sandwich, there's 2 pieces of bread and meat in the middle, right? So I can go create an agreement, say, let's with Kyle, hey, I'll rent your property for $1,000 a month. I'll give you $200,000 for your property, and I'll give you $5,000 down. Well, and I go to Tharmela, hey, I'll let you have this property for $1,250 a month. You know, if I give him $5,000, I'll give it to you for $10,000 down, and then I'm going to create a spread between the position and when the property is going to sell in the back end. So 3 profit centers. The spread between the credit to get into the transaction, the spread between the monthly cash flow, and the spread between the back end option price. So you can actually get paid in 3 different areas if you do that. But I know we're getting over Tharmela, so I'm covering a lot real fast. I just want to give a lot of people different ideas of things to think about, because all these strategies go hand in hand, guys, and can all work together. But these are just some of the strategies that you guys can think about doing. Or if you want to look a little bit deeper into, these are some of the ideas of why you would do certain strategies like this. But ultimately, guys, the main thing is you can't create wealth as an agent unless you're at EXP, right? That's why EXP is growing, because we're a wealth creation brokerage model. We have equity awards for stock. We have residual income through the revenue share and active through the sales model. But on the investing side, I want you guys to think about how the leads come into your office, break them down by price point and equity positions, and then you just figure out how to use the highest and best use of that lead. So you let the lead determine what you do with it. Most people try to determine what they want to do with it because they had an idea before the lead came into the office. You should be taking the lead and finding the highest and best use for the time effort, capital effort, and energy effort spent on that transaction. Now, I'll open up for questions, Tharmel. That's a lot of information, but.
Yeah, that's tons of information. Thank you, Connor. And essentially, that's it, right? Like, you really focused on a lot of different strategies that's out there, but this is why when you come into real estate investing, it's actually, you want to learn, it's like you follow a system, right? And you have to be in control at all times. So I'm really glad that you kept it really high level at the same time, because it can get confusing. So does anybody have any questions? Feel free to unmute and ask questions. You can leave it in the comment. But while people are, if anyone has a question, feel free to leave them in the chat. I have a question for you, Connor. So if you're somebody who is getting into real estate investing for the first time and wants to, own a rental property, do you suggest we manage our own property or get a property management company?
Yeah, I would manage your own properties, guys. Sorry, I'm getting some allergies here. But yeah, guys, manage your own properties, in my opinion, until you know that you shouldn't, if that makes sense. Mm-hmm. A lot of times in business, guys, like we see people ahead of us and we think we need to do things that everybody else is doing, like a property management company. Let your business naturally tell you when to do this, if that makes sense. I mean, I know people that manage 30 properties on their own by themselves. Mm. And I know it seems like a lot. And like people, you hear horror stories, but this is because people did the business wrong. Like if you have good tenants, you never hear from them except when you get your check on the beginning of the month. So if you have bad tenants, you hear from them all the time, right? So as you get better at selecting tenants, and also like I try to stay, my rental properties, guys, I like to stay in the 4232 brick rancher houses, cookie cutter type of houses, and nice areas by colleges, schools, and chain restaurants, because these areas, no matter what, will always have a demand for them. And I like to be in that 150 to 200K price point that rent for, $1,500 to $2,000 a month. Now, the reason I do this is because you're in a little bit nicer price point where, you're not dealing with a bunch of rundown properties. Like I used to buy like 1920 frame houses because they're low price point and the cash flow well, but I had massive liabilities long-term. And the tenants that rented this price point, they turn over and they damage the properties. And so I found that the best price point to be in my opinion, is in that 150 to 200K price point. This is a dual income, even a dual income single family or a minimum wage family can usually qualify for this type of property. And someone can help supplement the other's income if they get behind. And you're just going to always be able to find someone if the market turns. No matter how aggressive the market turns, this price point is always going to be on demand for affordable housing is one thing to think about. But you don't need to have a property management company right away, guys.
Awesome. Thank you, Connor. We have a questions that come in. Thank you, Trina. She said it was amazing. And then we have Anna said, do we have to set up an LLC to buy investment properties?
You don't. And I'm not an attorney, I might give you legal advice, I'll give you my opinion. You don't need to. I would. And when you look at your LLCs, you need to think this is, it's a protectionary measure for you guys, but it depends. Like people ask me, so let's make this more exaggerated question. Should I have one LLC or multiple LLCs? Which is another question that people get to when they come up. So, and then how many properties should I have in an LLC? I wouldn't look at what you have in a controlling position inside an LLC based off how many properties you own, but based off the equity position. So let's say you had one rental property that's worth 250K free and clear. You have 250K of equity at risk. So why would you have an LLC? So if something happened on that property tragically, and let's say someone broke their neck or whatever, they're not coming after your personal assets. It's a separation. So they can't come after your house, your car, you know, your personal bank account, only what's in that LLC. So what's in that LLC is at risk. So let's say you had 20 rental properties, but you only had $10,000 of equity in each house, which would not be a rental property you want to own in the first place, right? But that'd be $200,000 of equity in that position, or of equity at risk, if that makes sense. So you have one property versus 20 properties, but one has $250,000 free and clear equity value. The other one's $200,000. So I wouldn't look at it as how many properties to have in each one, but what comfort level you have at risk if something happened, if you know you had to have someone come after you, essentially, right? So I'd be looking at how much equity as far as a position in each LLC. And guys, in setting up an LLC is pretty quick and easy to do. So I own my properties in LLCs, and I also own some of them in what's called a land trust. That's going to be a whole nother conversation we could go into later. But yes, you should have LLCs, and I try to not ever. I think people shouldn't keep more than 250K in equity in an LLC, if that makes sense. So if you have 4 LLCs and you have $1 million of equity across your properties, I'd separate them into different LLCs just for asset protection. And there's a great company, guys, called Anderson Business Advisors. So Anderson Business Advisors, Clint Coons, he's does a lot for a lot of high-level investors. If you want to reach out to them, they'll be able to help you with a full asset management protection plan and really kind of help you dial in things for your personal business. I'm not affiliated with them. I just think they do a great job. And they're also helping a lot of people at EXP with their revenue share issues. One of the problems is guys are making a lot of money over here. And real estate is a great way if you make a lot of money with sales to protect your wealth. And so you can use real estate to protect your tax burden in many different ways. So as you guys start to make massive income with sales, start thinking about your investing business, not as a way just to compound and parlay into more wealth, but also how to protect what you've already created, because it's 2 things, make it and keep it, right? And so a lot of people spend a big part of their career figuring out how to make it, then they start making it, then they start figuring out how to keep it, right? And that's a big second step, right?
We have another question, Connor. How do you determine if a rental property will be a good investment for purchase?
Yeah, so there's multiple different ways to kind of analyze rental property, guys. And you know, there's probably 3 different ways that most people do. So I go off usually I started mostly going off a month netly cash flow rule. So what I would do is I would kind of calculate my all-in costs on the property if I was to buy it, renovate, stabilize it, rent it, and I'd back into my PITI. So your PITI is your principal, interest, taxes, and insurance. This is your total debt liability, debt service to own a property. And so let's say that my total debt service, say I'm looking at a property, what I'm going to do is a lead's going to come in, it's going to be in a rundown condition. So what are we trying to do, guys? So let's say we have a house come in, and this needs a roof, electric, basically gutted to the studs. What I'm going to do is, in order to find out what my back-end equity value is and what I can finance out, how much I can bring out of that property, is I'm going to run after repair market value properties. So I'm going to go into the MLS, and I'm going to pull all the comps in that area, the comparable properties, and I'm going to look for the top 3 properties that sold. And let's say the top 3 properties in that subdivision sold for $101, $102, and $99 a square foot. So I can pretty safely assume that I'm going to get about $100 a square foot. So if my rental property is 1,500 square feet, I can assume that my after repair value is going to be about $150,000. And then I'm going to run my numbers on what I can buy the property for and what I think my estimated repair costs are. And then what I'm going to do, what I would finance out of that property, or how much I can finance and pull out property. Now, most banks are going to give you about 80 cents on the dollar. So the goal is to be all in around 80 cents on the dollar so I can pull all my cash out. Now, once I put that amortizing loan on there after I talk to my mortgage company, let's say I'm all in for $1,100. I try to at least have $300 a month net cash flow. So I want to get at least $1,400 in rent. So I got $300 net cash flow, and I want to have at least a 20% equity position in that property. Now, why do I want 20% equity in a property? Well, when the market crashed in the cash flow market range, the big crash in 2008, guys, most markets did not go below 20% correction. Now, if you're looking at like high-end real estate, yeah, you saw some 75% drops and things like that. But a 20% position will protect you guys in $300 a month. Now, there's also the 1% rule, which is what a lot of people talk about. Let's say that you have a house that you're all in for $100,000. You want that property rent at 1% of your dollar invested. So you have $1,000 a month rent, if that makes sense. Now, the third way, may confuse you guys here, is a return on investment percentage rule. So let's say when I financed out of that first property, let's say that I left in a little bit of money. Let's say I left in $10,000. After everything done, went in, fixed in, financed out, got tenant, I'm about $10,000 out of pocket, but it rents $300 a month cash flow. Take $300 a month by 12, guys, what is that? It's $3,600. Now, if I left $10,000 in the property, what does that mean? I have a 36%, or I'm bringing 36% return on my 10,000, because $300 a month cash flow by 12 months is 3,600. So my cash on cash return for my dollar invested is 36%. And if you guys go by the Rule 72, you're doubling your money every 2 years by doing that. So I try to stay on any investment at minimum of 20% ROI return on a net cash flow return like that. So I think starting out, guys, as long as you have a 20% equity position and $300 a month cash flow, that's a good property. And that's pretty much how I built my career, looking at that rule. Now, that's the top of the range. Now, obviously, up until that point, you're trying to get the best deal possible. Like, obviously, you're going to try to get the lowest price with the biggest cash flow, but that's probably like the minimum threshold I would stick around at those numbers. And it protects you in case the market corrects. But I don't think the market's going to correct for a little bit of time, even though it seems scary. I still think, I think we got at least a couple of years still.
Yeah, no, awesome. Thank you, Connor. And to add to this, just from my own experience, I just wanted to say, make sure you're familiar with the Tenancies Act in your area. So it gives you, so this way you understand your responsibility as a landlord. So often, I kind of had an idea, but until stuff started happening to my property, I realized, oh, that's actually my responsibility to fix it. Because there's this often people have an ego and they think, oh, they broke it, they need to fix it. And often it doesn't work like that. So especially if you end up in the tribunal board, then you'll understand it actually is your responsibility. So learn the Tenancies Act. Even as a real estate agent, if you're going to be helping investors, learn the act so you're able to help them, because they're going to rely on you to be the person with the knowledge, right?
Yeah, and guys, like when you guys start your first rental properties, make sure you document everything. Like one of the mistakes I made was I just assumed people would just like naturally be normal and not treat my property and just like a landfill, right? And sometimes you have people like, I flipped a house, put like 60K repairs into it, and I had to go back in within like a few weeks, because sometimes if you're doing like foundation work or major work, sometimes after they move in, something happens, and the best thing to do is just go in and fix it. And they like wrecked this house within, it's like literally 45 days. I couldn't believe it that someone, like, I was like, did they actually intend to do this? Like, how could you mess up a house so much? But then you have people that live there for 5 years and it comes back like a pristine, like this, like, did this person live here, right? So the difference between a good tenant is the difference between a good life as a landlord. Now, when you guys have people move in, what happened to me with certain people was I didn't document the condition of the property before they moved in. And so then in hindsight, when we're trying to fight over this, hey, you like destroyed everything. They're like, no, I didn't. What do you do, right? So you need a property check-in sheet. You need to document all your properties, get a video of the property, a breakdown of all the repairs. I would get a close-up and I date it and like show like a newspaper when you do it the day before they move in, so you can show the condition. And I'd also give them a property sheet that they walk through and they try to check off, kind of like when you guys get a rental car, they walk you through to make sure that there's no dings and that you have to verify. That way later, if you did have to go in front of a small claims court or something like that, you guys are protected. And then the small claims court guys process is pretty quick and easy. It's not a big deal, but just protect yourself like on the front side by documenting your property, especially if you just invested a lot of money into it, because otherwise people are going to say they didn't do it. And if you can't prove it, you can't prove it, right?
That's awesome feedback. Thank you, Connor. We're at time, so we're going to transition over to our second half of our training. So appreciate it, Connor. It was so great having you. We're going to hand over the mic to Kyle to take over and give us a deep understanding of the EXP model and how this model is really changing the lives of many agents worldwide, including mine and my partners. So Kyle, over to you.
Guys, thanks so much. You guys have a great day.
Bye, Connor.
Thanks, Connor. Appreciate it.
Thanks.
Awesome. Thanks for the introduction, Thermel. Yeah, we're just going to get started here. So we're just going to dive deep into the EXP Realty business model. So I'm just going to share my screen here. And if you guys give me a thumbs up if you can see my screen. Perfect. Okay, great. Let's get right into it. Okay, great. So we're going to be going into the EXP Realty business model. Now, this is the model that we're going to be talking about. And it's a model that's really been disrupting the industry at the moment. And I'm going to give you a bit of a breakdown of how the presentation is going to go. So what we're going to do is we're going to start off with the different compensation structures that we have. So that's our 3 income streams. We have a sales model, the equity model, as well as a revenue share model. Then what we're going to do is do a live demonstration of the EXP cloud-based brokerage. And then we're going to slowly start to wrap up as we go through some of the back-end trainings and services that we have. That's going to be like the tools, the training, the resources, things like that. And then we're going to wrap up with what our group does differently and what we do above and beyond everybody else, why we've broken so many records here at the company. And at the very end, we'll do same thing as we just did there. We'll have some time for Q&A. So just save all your questions to the end. And last thing I'll say before we get started here is that even if you guys have heard about EXP before, I can almost guarantee you're going to hear information you've never heard before, or at least explain in a way that you haven't before. So with that being said, let's get right into it. So just do a quick introduction about myself. I understand it's not about me, it's about you guys, but I just want to give you a bit of a context as to who I am. So my name's Kyle Sutton. I'm a realtor here in Toronto, Ontario, Canada. Now my focus in real estate, I mainly focus, as we were talking about earlier, is on the pre-construction side of things. And actually, before I got into real estate, I was mainly focusing on actually e-commerce. So I did a lot of digital marketing for e-commerce brands, and I scaled multiple e-commerce brands into the 6-figure mark by leveraging social media, more specifically Facebook and Instagram advertising. And that's really what I do right now in order to grow my pre-construction business as well. Now, the other person I want to introduce you to is one of my business partners, Mike Sherrard, out of Calgary, Alberta. Now, Mike Sherrard is actually recognized as one of the top realtors in the world on social media, #1 in Calgary, #1 in Alberta. He's the co-founder of this incredible organization. The other co-founder was actually Connor Steinbrook, who you guys just met. Now, the important thing about this organization is not only does Mike have the most personally attracted agents to the company out of 67,000 agents, but he also has the most personally attracted agents that actually produce deals. And you'll see throughout the presentation why that happens is because of all of the resources that we pour into every single one of our agents here at the Wolfpack. We'll be going into detail to this right towards the end of the presentation. But with that being said, let's start getting into EXP itself. So first thing I want to talk to you guys about is ownership. Now, EXP, the company was founded in 2009 and actually went public in 2013 and actually made its way onto the NASDAQ in 2018 under the ticker symbol EXPI. Now, last year, we were actually one of the top 10 performing stocks in the world on the NASDAQ. And actually, the incredible part is just by nature of being an agent here at EXP, you actually get ownership in the company. And why that's so important is because, as agents, especially when we work with buyers, we're going to typically tell a buyer to buy and not to rent because ownership is so important. The problem is at every other real estate brokerage, you're essentially renting your real estate business because you don't get any ownership. Where at EXP, because it's an agent-owned brokerage, you actually own your real estate business. Now, the second thing I want to talk to you guys about is this right here. So this is the Icon program. And if you haven't heard about it, this is why all of the top producers are moving their license over to EXP, and it's made a massive difference for agents all over the world. So let me just kind of break down what it is. So at a typical brokerage, what happens when you hit a certain production milestone? You work like crazy, you spend time away from your friends, family, passions, hobbies, everything like that, and you build up your business. You get rewarded with, a plaque, a trophy, a bottle of champagne, wine, something like that, which is, looks great, but it doesn't really do anything for your business. Now, EXP, we have something called the Icon program. So at EXP, we're on an 80-20 split and with a $16,000 cap. Now, actually, once you cap, you go all the way up to 100% commission. And just 20 transactions after capping, you actually become an icon agent. And when you become an icon agent, EXP actually fully reimburses you your entire $16,000 cap back for free in company stock. So it's actually the first time ever in the history of brokerages that based on an agent's production, they've been fully reimbursed every dollar they paid in the company back in the form of ownership. And if that's not incredible enough, what it's done over the past 5 years is absolutely insane. So just to put this into perspective for you, because the 16,000 goes into company stock and the company's been exponentially growing, because EXP is actually the fastest growing brokerage ever in history. Let me break down what's happened over the past 5 years. So let's say, for example, if you got your $16,000 back over the past 5 years, so 16 times 5, which would be $80,000. But based on where the stock has gone over the past 5 years, that 80,000 would have actually turned into over $2.5 million, which is $2.5 million more than you'd have at any other brokerage. The moral of the story here, and this is what you're going to see throughout the entire presentation, it's the ability to get compensated more for doing the exact same thing you would do at any other brokerage. And, a lot of people sort of make this assumption that you have to do a lot of, attraction, recruiting, and things like that to earn stock, but that's not true at all. There's many, many agents at our company that now have multiple 6- and 7-figure stock portfolios based solely on their production. Now, the next thing I wanted to talk about here is the company growth. So you can see we've expanded to multiple countries all over the world. And we actually just this morning, we just hit 67,000 agents worldwide, which is very exciting because, like I said, we are the fastest growing brokerage in history. But why that's so important as an agent is the idea of being an early adopter. Now, we all understand being entrepreneurial that getting into an opportunity early, you usually get rewarded unfairly compared to those that wait for the opportunity to plateau. Now, for example, let's say you bought, something like Bitcoin 10 years ago, Tesla stock, or, any piece of real estate. Today, you're doing pretty well. Now, the same thing with EXP, because we're still on the exponential growth phase of this opportunity, you have a great opportunity to actually start to build some momentum here. Now, just to give you sort of an idea of where the company's projected to go, in the next 5 years, we're projected to be at 400,000 to 500,000 agents. And in the next 10 years, we're expected to be at 1 million agents. So again, it's still incredibly early for this opportunity where you really have the chance to start building some momentum. Now, the next thing I wanted to talk about here is dispelling some myths, because the thing is, you hear it all online. You hear a lot of people say, agents at EXP, they don't do any deals. They just recruit. They don't close any transactions. All they do is attract, all this nonsense. And that couldn't be farther from the truth. Now, myself personally, I like to let the numbers do the talking, because at the end of the day, despite what people say, despite their opinions, you can't argue with math and numbers. So let me break this down for you. So these stats here, they actually came out just at the end of last year, which is the sales volume growth of closed transactions, EXP versus the top 3 other brokerages in North America. Now you'll see EXP far outweighed the other brokerages in terms of production because we are the #1 independent brokerage in the world. But why is that happening? Is because the main thing, and we'll learn about this a little bit later, is when you save time and you can actually reinvest that time into income producing activities, your income goes up. Now, on the right-hand side, which is probably even a little bit more interesting, is the volume growth of agents. So not only do we sell more homes than every other brokerage, but we also substantially increased agents, while some brokerages barely gain agents at all. And as you can see, one brokerage specifically of the top 3 in North America actually lost agents. Now, why this happened? For 2 reasons primarily. Now, #1 is because of COVID. When it came last year, really took the world by surprise and, changed a lot of what we were used to. In a lot of places, you weren't actually even allowed to go to an office. So as an agent, you're paying for this office that you can't go to. And you also started to realize, well, I never actually went there anyway. So it really started to get agents to think, why am I paying for my broker's office that I can't go to, I don't use, I really don't see any value in this at all. Now, #2 is probably even more important, is because when COVID happened in certain cities, provinces, states, and countries, real estate was actually deemed an unessential service. So suddenly out of nowhere, agents were told, you can't do real estate anymore. You can't do what you were used to. You can't do open houses like you were used to. You can't do showings like you were used to. and everything like that. Now, agents at every other brokerage that had one income stream, which was commission, that went to zero overnight. Or here at EXP, as we're going to go through, we have multiple income streams. We still had the ability to earn income. So what it really did was help people realize how vulnerable they are by solely relying on one income stream to provide for their family. And if something happens to that income stream, something like COVID, then you put yourself and your family in a really vulnerable position, which obviously none of us want. So EXP sort of became, sort of a safe haven for agents where you're diversifying your income across these multiple income streams. And that's actually what we're about to get into here. Now, one other thing I wanted to say before we dive deep into the three income streams that you guys have is just a reoccurring theme I've noticed after talking with multiple agents when asking them, why did you actually get into the real estate industry? Now, of course, besides, helping people, I love working with people, all that kind of stuff, which is true, we all do. But really getting down to some of the real reasons, a lot of people, they want to build wealth and they want to create a lifestyle that's flexible for them and their family. So let's talk about wealth first. And wealth requires four things: duplication, equity, multiple streams of income, and the most important, like Connor was talking about earlier, is residual income. Now, at every other brokerage, you actually break the wealth quadrant because you only have one income stream that requires your time invested in creating it, where EXP has all four components of the wealth quadrant. Now, number two is lifestyle. Now, lifestyle requires two things, just like Connor was talking about, where you need time freedom and money freedom. Now, you can get money freedom at any other brokerage in the world. However, you cannot create time freedom because you have one income stream that requires your time invested in creating it. You don't put the time in, you don't make any income, you can't enjoy the lifestyle that you're working to build. Now, EXP, as we're about to go through, we have three income streams, and due to the nature of one allowing you to get your time back, this is where you're really able to create lifestyle, and why a lot of people actually refer to EXP as the lifestyle brokerage. Now, let's start diving into this here. So these are the equity opportunities that you have through EXP. So first off, the very first one is the ability to earn stock in the company on your first transaction every single year. So whenever you close your first deal every year, you actually earn $200 in free company stock. Now, anytime that you cap and you pay your $16,000 into the company, you also earn an additional $400 in free company stock. Now, if you decide to leverage the optional agent attraction opportunities and you bring your friends into the company, when they close their first deal, you'll actually get an additional $400 in free company stock. Now, the one in the middle there, as we talked about a little earlier, the Icon Award, which again was to do 20 deals after capping, you actually get your entire $16,000 cap back completely for free in company stock. Now, the last one there is the agent equity programs. That's actually the only optional equity opportunity that we have here, which gives you the ability to take 5% of your commission and get stock at a 10% discount. Now, again, this was completely optional. You don't have to do it. But if you guys can imagine having that opportunity to actually get discounted equity in the ground floor of the fastest growing brokerage ever in history, agents here, they are taking full advantage. Now, the other thing I wanted to talk to you guys about here is the revenue share plan. Now, this is something that you guys have probably heard a ton about. This is where EXP actually retains 50% of the company dollar and gives it back to the agents in the form of revenue share. And if you didn't hear, last quarter alone, we did almost $1 billion in revenue, meaning about $500 million was paid out last quarter alone in revenue share to agents. Now, why it's so important though, is sort of people have this, stigma or false assumption that EXP is sort of like a pyramid. Now, let me sort of break down how a traditional brokerage works versus EXP. So at a traditional brokerage, let's say RE/MAX, for example, you've got the owners of RE/MAX, then you'll have the designated franchise owners of, let's say, RE/MAX Ontario. Then you'll have the owners of the areas like RE/MAX Toronto, and then you'll have the specific office owners within RE/MAX Toronto, then you'll have the managers, then you'll have the agents. Now, when an agent at that sort of office closes a deal, let's say they're also on an 80-20 split, 80% goes to the agent, 20% goes straight to the top. You'll never see it again. It's going towards paying for your broker's lifestyle. Now at EXP, you only have two levels. You have the agents, and then you have the management. That's it. That's all you have. Now, when an agent at EXP closes a transaction, 80% goes to the agent, 20% goes to the top, then 50% of the revenue that goes to the company comes back to the agents for helping the company grow. So let me walk you through exactly how this works. So this revenue share chart that you can see here, it's actually modeled after the 7-tier system that Keller Williams uses. But the big difference is here at EXP, we actually share revenue before expenses, where at Keller Williams, they actually share profit after expenses. So when you really start to break it down, you'll see that there's an astronomical difference when you look at the numbers. And in some cases, there's little to no profit even left at some of these offices. So it's very inconsistent with what your payout might be. Now, the way that it works, pretty much everybody has 7 tiers here at EXP. I do just like everybody else. And one thing I'll say as well before we dive too deep into this is that, a lot of people make this sort of false assumption that you have to spend a lot of time, effort, and energy on bringing people into the company. But that's not true, because whether you're at EXP or any brokerage in the world, if your friend or old coworker or something like that just gets their real estate license and they reach out to you and say, hey, I just got my license, which brokerage do you think I should go to? Doesn't matter where you're at, you're going to say your brokerage. Now, the challenge is at every other brokerage, you can do that and get $0 for it, where at EXP, you can actually earn a substantial income. So let's break this down. So let's say my buddy John, he comes into the company, he would be on my first tier. So let's say John closes a very simple $10,000 commission, just for really easy numbers. So 3.5% of $10,000 is $350. So keep that number in the back of your head. Now, 80-20 split, 80% or $8,000 goes to John, 20% or $2,000 goes to EXP. And then out of the EXP company dollar, not John's money, out of the EXP company dollar, I would actually receive $350. So again, it does not touch the agent's commission. It's 3.5% of the total commission paid from the company dollar. Now, let me give you a second example. Let's say John brings in his friend Sarah, and Sarah also closes a $10,000 commission. So these two numbers here, they add up to 4%. So 4% of $10,000 is $400. 80-20 split, 8,000 or 80% goes to Sarah, 2,000 or 20% goes to EXP. And then again, out of the EXP company dollar, I would receive $400 from that transaction. Now, as you can see, as this really starts to scale out and duplicate, it starts to grow quite substantially. Now, the incredible part is right now, every single member of our organization that's been in the company for a minimum of 5 years actually makes over 6 figures per month residually after being at the company, which the thing is that's even more incredible is the ability to get the time freedom that we were talking about. Now, what I'm about to show you here, this is actually a revenue share photo from one of my business partners in San Antonio, Texas, named Pat. And the big difference between an agent at any other brokerage that earns money solely through commission and an agent like Pat, who earns revenue share as well as commission, is that an agent at any other brokerage, if they decided to, go on vacation for a month, for example, what's going to happen is they're going to lose listings, they're going to lose buyers, they're going to lose income, and they're going to be stressed out while they're on vacation. Whereas somebody like Pat, he can actually go on vacation for a month, not answer a single phone call, text, email, message, or anything. And at the end of that month, he'll still earn $165,000. And that's really how you're able to create the lifestyle. But the really interesting thing actually happens with the two nuances that most people do not know. And it's actually one of the main reasons why I myself personally even came to the company. Now, the very first thing is that the revenue share is actually willable. Now, everyone I ever talk to, they tell me that their family is incredibly important to them, and really as it should be. The challenge is, let's paint an unfortunate picture. Let's say after this meeting, I go out for, a showing, or I go to the gym or something like that, and I get into a bad car accident and I pass away. Well, unfortunately, I would only leave my family with what I have today. And unfortunately, for a lot of agents, that's not enough to really sustain your family. Now, at EXP, if that exact same thing happened, somebody in my family, or actually somebody in my will, can actually inherit my revenue share, which would actually provide for them for the rest of time. So first off, the revenue share is really a security blanket for your family that you really can't get at any other brokerage. Now, number two, which is incredible, is you actually have the ability to retain the revenue share after you stop closing deals. So let me paint a picture. Let's say you're at any other brokerage and you're 40 years old and you want to do deals until you're 50. So you want 10 more years of working in real estate, time away from your friends, family, passions, hobbies, working like crazy to build up your business. And then at the end of those 10 years, you're going to get a thank you and a handshake from your broker, and then your income goes to zero. Now, you're really left at that point trying to live off of your savings, right? And hopefully, you followed some of Connor's advice and you have some good investments, but that's not always the case with a lot of agents. Now at EXP, let's say you want to work those same 10 years until you're 50, but let's say you're healthy until you're 70 and you can maintain your license until you're 70. Well, then you're going to put those same 10 years into the business. And once you turn 50, yes, your transactional income will go to zero. But for the next 20 years, while you are able to retain the minimum requirements to keep your license, then you're going to continue to earn revenue share every single month. And the incredible part is it's probably actually still growing because there's people younger than you that are actually still working on building up their business. So really, you're looking at 30 years of income versus 10 years of income. So this is why it's a massive exit strategy, retirement plan, and a security blanket for your loved ones. Now, the next thing I wanted to show you guys here is I wanted to do a live tour of the EXP cloud-based brokerage. So we're going to do a tour here. So just give me a second here while it loads up. Now, I'll tell you guys that first time I saw this, I thought it was absolutely ridiculous myself. But so, laugh as much as you need to, but honestly, I just did not properly understand the power. And you'll see we do have a little bit of a Halloween theme going on here today because it's, it's Halloween. Everybody loves Halloween. So yeah, so this is the office here, and you'll see that, on the left-hand side, first of all, you'll see these are the flags of all the different countries that we're open in. And the incredible part is we're actually opening up in a new country pretty much every couple months at the moment. So our international expansion is absolutely crazy right now. Now, let me break down the functionality of this. So at a traditional brokerage, you've got your broker, and then you've got maybe, let's say, 1 or 2 admin staff, and then you got the agents. So you maybe have, 100 or so agents with one broker. And what ends up happening a lot of times with these agents, they say, look, I'm a new agent. I'm struggling. I can't get a hold of my broker. He's super busy. Can't help me. It's been 2 days. I really don't know what to do. Now, the problem is because you have one broker who's wearing every hat. So they're dealing with new agents, onboarding, training, marketing, compliance, risk management, getting sued, transaction, tons of different things for every single agent in the brokerage. Now at EXP, we have things set up a little bit differently. So we actually have over 950 active paid employees that work 24 hours a day, Monday to Friday, that are actually working here to support every single piece of your business. So really, you're looking at somewhere between a $40 to $50 million employee force that you actually get to leverage here at EXP. Now, let me show you something here. So let's say, for example, that you have some sort of tech problem, something with your CRM or your website or anything like that, and you need help. Well, at any other brokerage, you really have 2 options. You have option 1, call your broker. Number 1, hope they have time for you. Number 2, hope they even understand the technology you have an issue with. Or your other option is you email support overseas, call overseas. Either way, it doesn't matter. It's a massive waste of time. And as we've talked about, when you can save time and reinvest that time into income producing activities, your income goes up. So here at EXP, if you have any problem with technology, you can actually come in here anytime, Monday to Friday, 7 days, or Monday to Friday, 24 hours a day, because we're open in Australia. So we're always able to help people with technology. And you'll see there's 18 different people that are actually able to instantly remote log into my computer and fix any problem that I might have with technology. So this real-time support, what it allows you to do, again, is to save that time and then reinvest that time into your income producing activities. And then, of course, your income would go up. Now, the other thing I wanted to show you guys, which is super important, is the training opportunity. So we're going to move here into the auditorium. So it looks like a training actually just finished up here. So what this is it's sort of like a college auditorium, college lecture hall sort of setup where people can come in and they do the trainings for the agents here at EXP. But why this is so important is because the training is done 50 hours live every single week. So 50 hours of training every single week, but the training is done by the top icon agents. So those are the same agents that are doing cap plus 20 transactions in today's market. The challenge I hear from a lot of other agents at other brokerages, a lot of times their training's only once a week, And it's done by somebody who's a lot of times not even selling real estate anymore. And especially these days, as you guys know, even the past couple of years with COVID, a lot has changed. So the training here is incredibly powerful. And you'll see actually this Amy Peterson right here. She's actually an icon agent sitting here. She might be doing the next training here. So it's incredible the training that you get. And there you get training on anything you can think of, from buyers, sellers, investors, CRM, database nurturing, everything you could possibly think of, all done by the top icon agents. Now, the last thing I wanted to show you guys here are the broker rooms. So this is the exact same for every single province, state, and country that we're open in. Every single country has the same sort of layout. Now, let's say you have a problem with transaction and you need help with local transactional support. What you would do, let's say you're out in Florida. So you just click into Florida. And once you come into here, you'll see in Florida, they actually have 1, 2, 3, 4 state brokers specific to Florida that are able to help you at any time. Now, one of the important things is with these brokers, they are not wearing every hat because you have 950 other employees to help every other aspect of the agent's business. Like I said, we already have tech support. You also have accounting support. You have onboarding support. You have training. It's done by other employees of the company. Now, at a traditional brokerage, because your broker wears every hat and they're also typically compensated through the agent's production, there's a couple problems that usually come up. Number one broker, meaning one point of contact, wearing every hat, meaning they're dealing with everything for every single agent in the brokerage, and which is why they actually don't have the time. And because they're compensated on production, they're actually financially incentivized to help the top producers more than the new agents that actually need the help. Now, like I said here at EXP, because we have multiple brokers for every single state, province, and country that we're open in, you get undivided support that's typically better than any other brokerage. Now, last thing I'll say, and this is one of my favorite parts about EXP World, is that you have the ability when you're done, you click and you're out. There's no driving in the snow or the 401 traffic or the rain or anything like that. Now you can either get back to working on your business or spending time with your family. So again, you're saving a lot of time by doing this. Now, the other thing I wanted to show you guys here is our back office. So this is some of the training tools and the resources that we have here. So first of all, every single agent at EXP gets free access to KV Core. So this is an example of KV Core right here. This is my KV Core website. What it is, KV Core is widely considered to be actually one of the #1 lead gen, database, CRM, and nurturing softwares in the industry for real estate. So it's a fully IDX website, which connects to your MLS. So it has every single listing that's available right now, updated in real time. Now you have the ability to customize this as much as you'd like. So you can add testimonials, just listed, just sold, just reduced. And then you also have access to every single property that's currently on the market right now. Now, the other thing you also have the ability actually to purchase KV Core outside on your own if you want, because it is a third-party platform. But KV Core does cost between 8 to 10 grand per year, where at EXP, you actually get it completely for free. Now, you also get Making It Rain, which is a fully automated Google pay-per-click software. Then you also have ShareWorks by Morgan Stanley, which gives you the ability to track your stock and your stocks that are increasing. And then you also have the SkySlope, which is sort of your digital filing cabinet or transaction management system where everything gets reviewed by the brokers. Now, the other thing I'll show you guys here is the education calendar. Now, this is where you can find out all the different classes that are going on throughout the week. And you'll see on the right-hand side, these are all of the state and provincial specific classes. These are orientation, contracts classes, state meetings, things like that. That's all done on the right-hand side. Now, these ones on the left are all the trainings done by the icon agents. So how to get YouTube leads that convert, how to make your first million in real estate, farming on a budget, how to create your own 360 virtual tour, lead generation in the social digital age. You have, again, 50 hours of live training done by these top icon agents every single week. And that way you can pick and choose what you need for your business, and you can get taught by the top agents all over the world that are producing in today's market. Now, the last thing I'll show you guys here is Workplace. Now, Workplace is absolutely incredible because it's sort of a centralized platform, very similar to Facebook, that everybody at EXP has access to. Now, it's just like Facebook, except there's no ads, there's no distractions, there's no cat and dog pictures or anything like that. It's literally only focused on the business side of things. And this is actually why we do more referrals than any other brokerage in the world, is because you actually have access to the entire company. So let's say, for example, I wanted to send a deal out to London. I would type in London, and here are the agents in London. Same thing for every other country in the world, every city, you can send agents over there, even any country that we're open in. So if I wanted to send an agent out to Portugal, Spain, India, any of these countries that we're open in, you can actually search and find some of the top agents in the country. Now, the other thing is the ability to reach up. So you can see is you have the ability to contact anybody in the company. And I've contacted people like Michael Valdez, who is the president of international growth for the company. And he actually responded incredibly quick. I messaged him at 6 p.m. on a Saturday night. He got back to me in less than 10 minutes. And also you can contact people like Renata, Alejandro, and Andrew Thompson. These guys are Renata and Alejandro. They're the brokers out in Spain. Andrew's out in South Africa. So you can actually reach out and contact anybody in the company all the way up, even to the founder, Glenn Sanford, and he would actually respond because they actually care about the agents. And if you try to reach out to any founder of any brokerage ever, good luck actually getting a response, especially a brokerage as big as ours. Now, last thing I wanted to talk to you guys about is what our group does differently, why we've broken so many records, and what we're doing above and beyond everybody else here at the company. So the Wolfpack, like I said, it was co-founded by Mike Sherrard, who I introduced to you guys earlier, and Connor Steinbrook, who you guys already met earlier as well. And what we're doing is we sort of had the idea of how can we help agents reach their goals, and how can we fix any problems that we might find with EXP or any other group at the company. Now, one of the things that most agents are looking for is proper, strong social media training. And as I mentioned earlier, Mike Sherrard, he is one of the top realtors on social media in the world. And he actually designed this course for every single platform, and every single agent in our organization gets completely free access to this program, which is updated every single year. Now, what this is, it shows you how to market on Facebook, YouTube, Instagram, LinkedIn, every platform that you could think of, so you can start your real estate business. And this one here in the middle is probably one of the most used, is the A to Z modules. Now, what this is we've built out these specific goals for agents, and we broke them down into sequential order so you can actually achieve that goal without having to worry about where to start, where to go, where to finish, or anything like that. So for example, if you're a new agent with no business, no budget, no experience, here's exactly how to launch on every single platform in order to attract your first clients for free. If you want to create, identify, and build your personal brand, we can show you exactly how to do that as well. Now, if you just got your first listing and you want to know how to market across every single platform to get it sold for more money in less time, here's exactly how to do that as well. Now, the other thing I wanted to mention here is a couple of testimonials that we have from our organization. First off, John Pena on the right-hand side. So he's actually out down in Texas, and he was a new agent. He was actually at KW for 6 months. He had 0 deals, was actually planning on quitting the industry until he came over to EXP, joined our organization, started leveraging the tools that were in the Social Agent Academy for YouTube. Now he's leveraging 3 to 5 deals every single month, and was just able to retire his wife from corporate America in order to help him with his real estate business. Now, on the left-hand side, you see Suman Kim. He's actually a brand new agent, and he's actually also dominating on YouTube. He's actually closed well over 55 new deals in his first 8 months, all about $1 million deals, by leveraging free strategies from the YouTube training course. Now, he's done that with no prospecting, no cold calling, no door knocking, and no ad spend at all. Now, these are just a couple examples. We have tons of incredible agents in our organization that are absolutely crushing it right now by leveraging the social media training that you guys get. Now, the other thing I wanted to mention is what we do a little bit differently than everybody else. So first off, we have real estate investment training, actually a full built out course by Connor Steinbrook that every single member of our organization gets access to completely for free. Now, Connor also built out a revenue share team building academy, which allows you to properly understand the EXP Realty model so you can leverage it yourself, as well as how to build, grow, and duplicate a real estate team. Now, we do also have 4 mastermind calls per week, which is actually 4 times more than any other group at the company. So on Monday, we typically focus on mindset, strategy, team building, communication, and sales. Tuesday is on branding, business growth, as well as social media. Then Thursday, we have leader calls for the top leaders that are in our organization to help them grow their team. And then Friday, we also have top 100 influencers at the company that are able to tell you how they got their success, and you can actually start to grow your business as well. Now, you'll see near the bottom there, we actually have direct one-on-one support 7 days a week with myself, Thermella, everyone else in our organization, as well as Connor Steinbrook, who you met, and Mike Sherrard as well. So anything that you guys have in terms of questions, if you have any questions about building your business, building your brand, building anything to do with the real estate industry, we'll sit down with you one-on-one 7 days a week, and we'll help you make that possible. Now, the last thing, this is probably the most important if you guys are interested in growing your revenue share organization, if you do care about the passive income, is we will actually help grow your revenue share organization. Now, let me sort of break down how every other group in the company attempts to grow. Now, either A, they send a video presentation done by somebody else. And let me tell you this, if somebody ever sends you a video presentation, that's a big red flag, them saying, look, I don't care about you. You're the same. I don't care if you're a new agent. I don't care if you're a team leader, top producer, or broker. You're the same as everybody else. Watch this video. Come make me money, which, as you guys can probably understand, that's incredibly disrespectful. And what it does, it pushes people away. Now, the alternative is you'd have to sit here and do the same presentation that I'm doing now for 60 to 90 minutes anytime somebody asks you about the company. But the challenge is, because you're new, you don't properly understand the model, and now you're taking time away from your production business. Now you're not going to get the agent, you lose a deal, now you lost twice. So what we'll do, and why we have the highest conversion rate in the entire company for bringing agents into the company, is we'll actually sit down one-on-one with your agent and help them understand the model and tailor the presentation to what they care about, not what I care about, not what we care about, what that agent cares about, whether they care about production, whether they care about attraction, or a blend of both. We'll make sure that they understand how this model will benefit them. And then, of course, they would join under you. Now, the best way I'd love to think about it is, we're sort of your behind the scenes Navy SEAL team, where we're going to do all the work for you, and you actually get the rewards at the end of the day. Now, the last thing I wanted to talk to you guys about are the fees. So in the US, like I said, you're on an 80-20 split with a $16,000 cap. Once you cap, you go all the way up to 100% commission for the rest of the year, and you go down to just a $250 cap transaction fee. Now, 20 deals after capping, you become the icon agent. You get your entire $16,000 back in free company stock, and then your transaction fee is actually further reduced to only $75. So it doesn't matter if you sell a $5 million home, you're only paying $75. Now, the standard cost that we have here, so it's just $149 to get started. That includes actually 1,000 free business cards, your KV Core setup, Sky Slope setup, ShareWorks by Morgan Stanley setup, and of course, access to all 950 employees within the cloud. And then after that, it's just $85 month to month for the cloud brokerage fee. Now, there's a $25 broker review fee per transaction, just to make sure all your paperwork is correct. And then there's a $40 risk management or E&O fee per transaction that caps at $500. A lot of brokerages, they charge you that up front, but here at EXP, we just do it on a transaction by transaction basis. Now, lastly, here in Canada, it's almost identical, just slightly different with the currency exchange. So it's an 80-20 split with a $16,000 cap. And then you go all the way up to 100% commission. The only difference is you'd go to a $285 cap transaction fee. And then again, once you do those 20 deals, you become an icon agent, you get your $16,000 back in free company stock. And then your transaction fee is further reduced down to just $75. Now, the fees here, it's just $199 to get started. And again, that includes your business cards, that includes KV Core, Sky Slope, and then, of course, access to the cloud, and then just $139 per month after that with just a $29 broker review fee per transaction. Now, lastly, after this presentation, you guys are going to get an email from us with a step-by-step on exactly how to actually join and partner with us to get everything that I mentioned, everything that we talked about in the Wolfpack, as well as everything that EXP also offers. We're going to send you a link. Just make sure you talk with whoever invited you, and we'll show you exactly how to do it. It's very, very simple. Only takes about 2 minutes. It's a very simple form that you got to fill out.